10R trade, guys. That's 10% of your portfolio. Hi guys, and welcome to my first educational video on trading. And in today's lesson, I'm going to be teaching the smart money concept of imbalance. Now, imbalance is the idea when price pushes strongly in a certain direction, it leaves a bunch of orders behind where stops need to be hunted. So price will generally return to that area where it pushed strongly to then put further on, go in the direction that it was supposed to go. So I've drawn up these candles here, right, to try and explain it better to you. So we got downtrend, right? And price is going down, breaking lows, and then here carrying on going down. But after this candle's finished, right? It has left a gap between the previous candle's low and the candle's after high. Now it has left this gap right here, and this gap is what you would call imbalance from the low wick to the high wick. And it would obviously be the opposite if the market was going up. So here, this would be your imbalance right here. So from this, you can expect price to return to this area and potentially reject it. It won't always reject it, but most of the time it will. So yes, I hope that's a concept you can grasp. And now let's go through a few examples. So let me just delete this. And okay. So I'm going to drop down to the hourly chart and bring up some imbalances. So as you can see, some of these candles are painted black. Now you might be asking why, and the reason for that is I have this indicator called, and you just hit the indicators button on TradingView and type in imbalances or imbalance, and it's the first one by Wolf Trader 155. That's the one that you want to install. So you click on that, and then it will paint all your candles black that are imbalances. So to begin, you would go and find all the imbalanced candles and you would draw them out. So you'd go from wick to wick on the hourly chart and stretch it along, and what happens? You get a small little rejection here off of this imbalance on the hourly. Nice, that's what we want to see, because this small rejection is a bigger rejection on the smaller time frames. And then what do we do next? We carry on. We also got one here. It's imbalance. There you go. So you go from the high to the low, hits it, rejects it. It's that simple, guys. Again here, you would go high to low, and then obviously half of it is already taken out. So you would take into account this candle as well, as it's already taken some of the money and it's not left open. Remember guys, this imbalance has to be left open for it to work. If it's not left open, it won't work because the money is already taken. You'll draw that out and then bang, price hits it, gives a little small rejection, and then goes for it. That's fine. You only want the small rejection. That's all you need to be profitable in trade. And then what do you get next? Another imbalance, and what do you see? Got wicks into it, goes over, that's fine, doesn't matter. It comes over and then rejects it. You would probably aim for your stop loss to be above these highs anyways. Okay, not too high, but obviously I'd get back to this later and tell you how you would deal with a situation like this. It's very simple. Now here, what have we got here? Another imbalance, comes into it, rejects off of it, and then pushes up. But quite clearly, this imbalance is huge, right? So how would you overcome this massive imbalance? Well, you would drop down to the lower time frames and slowly narrow it down. So here, so the low is still the same, but the high It's all the way down here now. And then go again, 15 minutes. And what do you see? Low still the same, high still the same. This would remain the same. And you can drop down to the 5 minutes if you want to. It's all personal preference, guys. It doesn't really matter. If you get in the trade and make profit, that's all that matters. But here, you could narrow it down to the 5 minute. Got a little bit of imbalance right there. Now money has to be taken. And lo and behold, price wicks into it. This would be your perfect setup. And you would enter 50% of the imbalance as shown. And you put your stop at the low right here, because if it passes that, then your imbalance is invalid anyways, and it doesn't really matter. You're going to lose. It really doesn't matter. Everybody loses. Target the high, and what do you get? 7.25 trade, guys. That's crazy. Expand it up to the high. A 10R trade, guys. That's 10% of your portfolio. You could increase that if you were to hold it at the top. Obviously, let's be realistic and go for the 7%, because that's great still. Head back to the 1 hour. And what do we have here? Bang. Imbalance on the 1 hour. And what happens? It rejects it. It's really that simple. Imbalance on the 1 hour again. And what happens? It rejects it. Okay. Now we've got these examples, like this one here, it came above it. And this one here, it came below it. That doesn't matter. I can tell you why that doesn't matter, because if you were to drop down to the lower time frames again, there you go, 15 minutes, the 5 minutes, wow, look at this. And you refine it, you narrow down your imbalance from the 1 hour. Remember that, guys, you don't just pick it out on the smaller time frames, you narrow it down from the higher time frames. That's where you win. There you go. Right, so possibly this one we wouldn't have got triggered. But boy, we were really close. So maybe if you had put it there. Again, it's all personal preference. Lows here. Target what? This high? 4.72. It's really that simple, guys. You just bounce off the imbalances, take the small profits, constant small profits, okay? And where's price going to now? Look at this, drop down to 30 minutes. Wow. Imbalance. Hit the imbalance, narrow it up, make sure you cover all the possible imbalance that could take. This is perfect trade right here. Hit the high, target the low. 2.37 trade there. Obviously it's live at the moment, so come back in time, go on your trading view, hit the replay button or scroll back and go to the 24th of June 2021 and tell me if this trade wins at 2 PM London time. And you see it win. You see it come down and reject this imbalance. But yes, right, so you can expand on the imbalance by using the daily chart. Now, let me show you what I mean by this. So, if I delete all of this, this doesn't only apply to the daily chart, it's just the one I like to use it on. So, let me try and find an example of where this would apply. Okay, so if we go back here, price pushed up, right? Just here. Obviously I've seen this in hindsight, but the concept still applies. Bang. Price pushed up on the day after, but the next day hasn't even begun yet. So as the next day starts, we know that price needs to retrace back down to this height to fill in the imbalance. Okay? It's just an extra tip for you guys. So we can anticipate price is going to come down to here before, at least before it starts coming back up again. Okay? So then you can drop down to the 30-minute chart, and what happens? Wow, the line we just drew coincidentally lines up. It's all rigged, guys. You just got to know the secrets. Well, yeah, sure. Alright, price coincidentally lines up to this area, and we wait for price to come down. Bang. So now that daily chart is filled. So what do we expect now? So we had imbalance here, and there's imbalance here. There you go, look. So it's completely filled this one, and it's just touched this one. I know this candle overlaps it, but I would say this one counts as well. And we get a strong rejection off of it. So if I line that up and entered on this hour, stop loss down here, target, I'll target like this high maybe, and what happens? Guys, you can't make this up. But now we're on the hourly, okay? Price has given strong push up, needs to come down to this line again, just like we did on the daily. So we can sit back, relax, because we know price needs to come down to here before it goes up. Be patient. It doesn't matter if it comes down. But, okay, we were lucky enough that it hit TP almost straight away. There you go. But now we're on the hourly chart, and price has left what? A bunch of imbalance. So what can we expect? Just wait, guys. Might go off without us this time. But when price comes down to this area, we're going to see a rejection. Bang. What'd I tell you? These aren't cherry picked. I didn't know that was going to happen, but it did. See, huge rejection. Came into it, rejected. Sweet. That would have been a nice win for that day. So yeah, guys, I really hope you enjoyed this educational video on how to trade imbalances. Please, if you thought this was helpful, like and subscribe. Let's say if we hit 10 likes, quite a small channel, if we hit 10 likes, I'll create a more in-depth video, and I will go through a lot more examples on how to trade these imbalances. It's all about repetition, guys. I can drill it into your mind on how to trade these. It's really that simple. So yeah, please like, subscribe, post notifications on if you want to stay updated for all my future content.